Hi everyone, welcome to another Learn, Grow, Invest meeting. It is good to be here with you this evening. I'm joined by my co-host, Lisa Marie. Yeah, so we have a very interesting discussion here for you today. So we want you to take a minute to share this video, like the video if you have not done so as yet. If it's your first time here, be sure to subscribe. We're going to be talking about which is better as an investor. Should you trade or should you invest? And by invest to mean, you're going to be focusing on buying and holding past a certain point. So it's not that we're going to explain all of that soon. So I'm going to get started with a word of prayer. That's how we start all our meetings here. So let us pray. Lord, we thank you so much for this day and everything that it has brought. I pray that as we meet here as investors or traders, that we will just have a great discussion, great fellowship, sharing perspectives, learning from each other. And I pray, Lord, that your spirit will be here with us and that everybody will be blessed by this discussion. In Jesus' name, amen. All right. So I'm going to ask you again, just please share this video. Help us reach more persons. Like the video if you haven't done so yet. So I'm going to hand over to Lisa. Lisa, take it away.
Thanks, Jermaine. Hi, everybody. Welcome to another episode of Learn, Grow, Invest Club, where we pretty much do teachings of all the different investment instruments that we have out there. So far, we have gone through quite a few. Today is pretty much another versus. So it is whether or not you are a trader, so somebody who prefers short-term, getting in and out quickly, and that can be within the same day, within the same week, or even the same month. It's usually short-term though, and you're not doing it for long-term love. When we say investing, well, everything we say is investing. It's typically about somebody who is more long-term, somebody buy and hold, somebody who wants to go in for minimum a year, 2 years, 5 years, 10 years, a lifetime, something that they can give off to their kids for the future. Now, the person that we have coming on, she is someone who has a lot of experience in both, but she has a very interesting short story to share. So I will go ahead and give you a little bit more information about her. Her name is Shanice Williams. Shanice describes herself as an investor. She obtained a bachelor's of science in chemistry from UWI. She has since worked for several private sector, public and private sector scientific and environmental control companies. She always had an interest in financial sector. So she then ventured into investments and accounting, gaining certification in securities management. We have Chike, who always likes to that you should definitely get your securities management certificate. She got it from UCC. She offers training in her method and style of investing through her Top Striker workshops and has since impacted scores of new and blossoming investors. She has enjoyed immense success through her personal investing journey, reaping aggressive returns on her portfolio annually. Aggressive returns. In her spare time, she enjoys reading and participating in charity work. She's a part of the Rotary International Organization, where she sits on the executive board of the Rotaract Club of Kingston as treasurer. So, ladies and gentlemen, please give us a virtual round of applause for Shanice. Hi.
Hey, Lisa.
Welcome.
For watching. Thank you.
We're very excited to have you here, especially because we have so many persons who are the long-term investors versus the short-term traders. So tell us a little bit of how you got started in investments.
So in investments, I started around 4 years ago. When I just started working and making a little money kind of needs to go somewhere. You do need to plan for your future. So it was definitely the people that I had around me at the time, because Danai Hall, you guys had him on the show before. He's one of my close friends, and he was like, "Shan, you need to invest your money. We have to get this started." And then we met Randy, and we linked head with Randy. Randy invited us to this group. Go in the group, and it was a whole new world. I was like, "Wow, this is actually a real thing. People are making real money from this." And I'm not rich. I didn't have a ton of money to start with at the time. I started with roughly about $15,000 at the time. And I held tight to those $15,000. Over the years, it's definitely grown to thousands of percent. And I picked up a lot of knowledge and experience in the market that allowed me to start using my own methods and strategies in investing to be able to reap the returns that I'm getting now. And definitely learning from people like Danai and Randy. Randy's grower classes are great. I did a grower class, and what the grower class did for me the most, I think, was give me the confidence. Because that's what a lot of people in the market now lack. That confidence to get over your emotion, to get over the fear, to say, I know what I'm doing. Let me just go ahead and do it. So my journey has been incredible. The money I'm seeing in my account now is not something I ever thought I'd be able to see in my youth. But it's here. I'm enjoying it. It's what I enjoy waking up to do. I'm in the market every day. That's the only way to reap these aggressive returns. I wouldn't say I'm solely a trader. I do like a mixture of having a long-term portion and a short-term portion of my portfolio. I think that's, well, for me, I think that's best.
Well, that's a lot of information, and that's some shocking information, because I think I was a little bit surprised that you said you started with $15,000. You hear a lot of you need a large sum to invest. I think the first time I wanted to invest, I think I maybe had $50,000, and it was back in the day, was maybe back when I was 19, 20. We won't talk about how old I am now, but and somebody said to me that if you only have $50,000, you can't make any money with that. That is, you need large sums. Yeah. So a lot of people need to hear from somebody who is making money that you can start with a small sum. That is very, very inspirational. But tell me now, what do you define as trading? So what is your time frame that you would consider to be trading versus being a long-term investor?
All right, for me, when I refer to trading, I'm referring to anything less than 3 months. So a couple minutes going up to 3 months is my time frame for trading. And my definition is, I still consider trading to be a form of investing, because it's not like a one-off transaction. It's repeated buying and selling of a security, but you're buying and selling over a shorter period of time than instead of when you're investing, you're buying and you're holding for 5 years, 10 years, the decade down the line.
Okay. So you say you do both. So that means you have some long-term investments as well.
Yeah.
How long do you hold your long-term investments?
Until they hit my goal.
So you have short-term trading goals, long-term investment goals.
Yes.
So what percentage of your portfolio would you say is trading versus investing?
I have to think about how it's saying now. All right, the percentage right now, it's probably about 45% long-term and probably 55% trading.
Okay. So you're heavier on the trading even with the overall percentage of your portfolio.
I'm heavy on the trading, but also trading accumulates at a faster rate than your long-term investments. So even though my trading portion may not have been as big as my long-term portion, as I trade, that accumulates at a much faster rate than my long-term. So it will eventually surpass it until I restructure, increase my long-term portion. And what I do sometimes as well is use my long-term portion to finance my trading portion. So like hold some long-term investments, take a margin loan, use the margin to trade.
All right, you got it, everybody. Secrets to the trading. Okay, so thanks for giving us that base information. So tell us, what are some of the misconceptions that you've learned or that you've heard as someone who trades?
Big misconception. We said it earlier, you need a lot of money. You don't. Actually, the more money you have is the harder it is for you to trade. Because as your portfolio grows, you're going to especially in the Jamaica stock market, we have a very illiquid market. So the way you invest $100,000 is not the same way that you can invest $100 million, especially on the Jamaica Stock Exchange. So you do have to split up that portion, and so the more money you actually accumulate is the more you have to adjust the way you invest or the way you trade.
Okay. So for all those that are listening, what would you recommend, or what type of investor would you recommend become a trader?
All right, so you have something called investor profiles, right? And everybody has their own investor profile, and it depends on a lot of different factors. So it can depend on your age, the life cycle that you're in, because the younger you are is the longer your investment horizon is going to be. So if you're in the accumulation phase of your life, which is when you just start working till you hit about 45, in that stage, you're allowed to take on a lot more risk because you have a longer investment horizon in order to make it back if you lose it. So the risk that you can take at that age is a lot different than the risk that somebody in their, let's say, retirement age can take. Because when you're in retirement, you're no longer, you don't have that safety net. Because when you're young, you probably have a job to fall back on. So you're not depending on what's in your portfolio to finance your life. You're using it to accumulate wealth for the future. And on the other hand, somebody in their retirement phase, the money that they have invested is the money that they're going to need to finance their life. So they're going to be needing, depending on like dividends to help them survive. That's their income. So you cannot actually take as big a risk when you're at that age. Also, you have to look at the amount of money that you have working with and the responsibilities that you have. Do you have any dependents? Do you need it for school? Any sort of debt that you need to pay off? All of that has to factor in. You have to look at your risk appetite as well. Are you okay with your stock falling a certain percentage if you know that it's going to go up another percentage? But if your heart can't manage that risk, if you lose a percentage of your money, then trading might not be for you. You might need to put your money in some long-term assets and forget about it. So you know that you put it in some mature companies, and in 10 years, you can still expect that company to be around. Whereas when you're younger, you can go into the growth stocks, and those are the stocks that are better traded.
Okay. Boy, you just want to hot up everybody's head today. So what do you think it takes to be a successful trader? You had said if your heart can't manage it.
Yeah.
But are there other emotional and psychological aspects that you think persons would need?
So to control those emotions, set a goal for yourself, stick to your goal. So if you go into a stock, you say you want to make 20%. I'm saying you're willing to take a 20% advance on that investment. You need to also assess how much you're willing to lose on that investment. So and how much you're willing to lose should be a very small fraction of how much you're actually willing to gain. So if you're in the stock, it moves to the 20%. There are a lot of people, they see it move to the 20%, they're like, maybe can go a little further. Greedy.
Stick to your goals. Stick to your goals. Yeah.
Go there and it dropped. And it dropped 10%. And then that's when you cut. Because you didn't really understand the goal that you're making for yourself and you're not sticking to it and you let your emotions take you over. So you miss the 20% mark. You miss the 5% mark that you would have allowed it to fall to. And you're now stuck in a loss and you take the loss at that time.
So have you had any psychological or emotional effects that surprised you? So like you get married to a stock, you're just like, no.
I don't marry any stock. Like a lot of people know me for loving the company Pulse. I don't currently own Pulse. And when I tell people I don't own Pulse, they find it as such a shock. Because they're like, you're the Pulse girl. I'm like, what? I don't belong to any stock. I'll never marry any stock. If I see an opportunity, I'll go into the stock. When it hits my goal, I'm out. If I see another opportunity, I'll go back in. I'll take another
Where's Chike when you need him?
I'll come out.
We have Chike, who might be joining us later on. Chike is a lover of Pulse. He is
I don't know if he's Pulse. It's a fantastic company.
Well, so we don't have a lot of women in, I don't want to say investing, but in trading. We do have a lot of women in business, but I think you being a female must be very inspirational for a lot of women who are, for lack of a better term, scared.
Yeah.
We had our Women's Day event. We had our Women's Day meeting the other day, and we were talking about that women are great savers, we're great budgeters, but we don't necessarily see women jump into the real grab it by the horns type of bull market, investing or trading. So what would you say to get women to be more active in the, not just the investing realm, but in the trading realm? So as a female, I'm assuming you don't consider yourself a typical female with regards to that. So what do you think women should do to get it kick-started?
I mean, I'm not sure why women wouldn't feel like they can trade.
Because they don't want to lose money.
All right.
Isn't that how it works? Like I have
first
money.
rule of investing, don't lose money.
That's the rule number one. Don't lose money.
Number one, don't lose your money. But get over that fear. Because that fear held me down a lot when I just started investing. Because my first year of investing, I definitely wasn't reaping the kind of returns I'm getting now, when I'm getting like triple-digit percentage gains at the end of the year from a portfolio. But it's honestly just the mindset and understanding what you're doing, having the confidence in trusting yourself, having the confidence in yourself. You do your analysis, you see a play, you've seen this same play happen several other times in the market. Why is it going to just be completely different now if we're seeing it on a regular basis? The more research that you do, the more you read, is the less of a risk that trade becomes. So
you hearing me?
I'm
sorry. I got
chipped out?
Sorry. It seems my internet chipped out a little bit. Okay. So All right. Let's say they don't have the confidence. How do they build that confidence? And we're not talking women alone, because we do have men that are afraid to be aggressive, that are afraid to grab the bull by the horns. What would you consider if they have $15,000? What strategy are they aiming for? Are they aiming for, just how do they start off to break that I don't want to lose money fear?
As I say, stick to your goals. Make a goal for yourself. Do your proper analysis. Say, I want to make 20%, but I'm willing to lose 5%. So if I see it hit the 5%, I'm not going to try and wait for the 20%. I'm going to come out. So you make your goals, you stick to it, you do your research, always read, stay ahead of the market. That is the only way to really beat the market, is to know information before everybody else gets the information. Because by the time the information reaches to the public, it's too late. So if you do your research from the quarter before, and say certain company coming with a very nice quarter, and the market is not even reacting to that company yet, you jump in, you stay ahead. And by the time the event reaches, because that is what it is with trading, you're trading towards and against events that are happening around the market. And with our market, there are certain and special events that the market has, or should I say, the investors in the market will have very exaggerated reactions to. And you observe that reaction. Your experience in the market also helps a lot, because you're not going to get it all in your first probably year of investing. I definitely didn't. It's going to take you some time in the market in order to get to a level where you're comfortable, where you trust yourself that I know what I'm doing. I know this is going to happen. And I've seen it several times before over the years. I'm very confident in this. I can put my money here. If it falls to this percentage, I'll take it that I was wrong. I'll come out. And when it hits my goal, take my profit, I'm out. And then rinse and repeat.
What's your biggest percentage loss?
Biggest percentage loss?
Mm-hmm.
That's a good question. I think somewhere between 20 and 15%.
So you're very, very disciplined with coming out.
I'm very disciplined. And sometimes I will willingly take a loss if I realize that I made a goal, I had a timeline, it gets to my timeline, I was wrong about my analysis, or something happened within the universe of that company that is going to change the conclusion that I had from my analysis. So I will willingly take a loss if I see another vehicle that is going to allow me to make back that loss and make the percentage that I would have wanted to, that I'm not going to get from this stock in the timeline that I had from before. So you also have to do your assessment, go back in, reassess, always do your reassessments to ensure that what you think is about to happen is really happening. And if you do it and you realize that you missed something, you were wrong the first time, cut it. Go into something else that is going to allow you to make it back at a faster rate. Because you're not always right. There are going to be times when you miss something, you're wrong about it. Why still marry the stock?
So did you just get up one day and you're like, yeah, I'm gonna be trading? You just decided to start in trading? Because most people don't start in trading.
Most people don't start in trading, but I can't say I just get up one day, because I was doing it for about a year and a half before I got into the aggressive side of it. It's definitely after I did when Randy just started his girl classes. It's like I knew I had the knowledge, but going to that class and him laying it out the way that he did, I was like, I think I kind of understand what I'm doing, but I just don't have the confidence in myself to really trust what I'm doing. So after that class, I definitely started trusting myself more, and I did it. It worked. Did it again. Worked. Did it a couple more times. Wow, I'm not too bad at this. And at the end of that year, I made 276% on year to date on my portfolio. And I saw that, and there's no going back.
That is awesome. So, do you think that traders lose more in fees? There's a concept that says that traders lose more in fees. So, how do you combat that?
Definitely, you can lose in fees if you're doing short term, because when you're short term trading or investing, you're not necessarily going to get the 100% on every play. Sometimes it's a 10%, sometimes it's a 15%, a 7%, but you're just doing it repeatedly. Because if you do 15% 5 times, that's 100%. But you also have to adjust it for your fees. So you need a broker that offers you very reasonable fees. My main broker is VM Wealth. Their fees are 0.5%, which is the lowest in the market now. I believe Sagicor is also 0.5%, and Proven is 0.5%. So you have to know what fees your broker charges when you're going into trades, because you do have to minus those from your trades. And any trade that you make, you have to ensure that it clears your fees before you even go into it. So if you're going into something for 2%, 2% of that is probably going to be fees. You're not making any money.
So if you're aiming for 15%, you aim for 17, and then the 15 is yours, and the 2% would be your broker fee. If your broker is a 2% commission person, entity, sorry. Okay. So what's the best way for you to like set your goals? So I know you've mentioned a lot of 5% in loss and 20% in gains. What if somebody wants 40% in gains for the year?
So if you want a 40% in gains, how much you're willing to lose should be, well, how much you're willing to lose, how much you're willing to gain should be about 2 or 3 times how much you're willing to lose.
Okay.
So you use that and stick to it. You go into something that you expect is going to give you 40%. You make SMART goals for yourself. Those who have done my course, I would have definitely spoken about the SMART goals, and those who would have done the Grow course, Randy speaks about SMART goals as well, that being specific, measurable, attainable, relevant, and time bound. If you stick to those, and if you do your analysis based on SMART goals, you can't go wrong.
Okay. So have you met many other women that do aggressive trading?
Not many, a few, because we have this group, and there are a couple of women in there who definitely have jumped on the short-term investing train, and a lot of them are doing pretty well for themselves. So I've come across a few in probably the past year or so.
So let's say someone comes to you and says, I want to get into investing, I want to start investing, what's the advice you have for them?
Start.
No, but would you say,
start?
Yeah, but what do they do? Do they do trading? Do they do investing? How do they start?
Well, as I say, it depends on their investor profile. They have to know how much risk they're willing to take, what responsibilities they have, how much money they have, what will happen if they lose all of that money. Do you have time to make that money back? Are you going to lose sleep over it if you lose that money? If so, if you don't have the time as well to do the heavy research, because trading takes up a lot of your time. I have a 9 to 5 and I try to trade during my 9 to 5 most of the times. And it does take up a lot of your time. There are many times that I have to just put in orders and then I go in a meeting, and by the time I come out of the meeting, the order filled. I'm like, all right, great. So you have to plan ahead. You make your trades, you outline all of your plays. In December, I outlined most of the plays that I was going to make for this year. So at the start of January, I already knew what my portfolio was going to look like for the rest of this year. So you really just have to find your own strategy, make your plans, understand how much risk you're willing to take, understand how you're willing to spend your own money, and understand how much time you have to make it back in the event that you do lose some of it.
So you don't think trading is for everybody then?
Trading is not for everybody, no.
Okay. Because I'm saying if investing is for everybody, because I'm sure everybody wants to invest. Everybody wants to be an
Stocks are probably
investor.
not even for everybody. Stocks are the riskiest asset class. There's some people it's probably better for them to hold their money in some T-bills or some bonds or some preference shares, because ordinary stocks are the riskiest asset. And especially if you're somebody in your like retirement phase, you need something that is going to preserve your capital first and foremost, and pay you a dividend or pay you some sort of income along the line that you're investing for. And if you put your money in growth stocks at a retirement age, you may not necessarily be 100% right all the time, because that's the thing with stocks. Nobody's 100% right all the time. But you need to be able to do your assessment, see where you fall short, or learn from all your mistakes. I've learned from all my mistakes in the market. But I'm still at a stage in my life, in my accumulation phase, where I can still make it back if I lose. But somebody much older than me won't be able to do that. So maybe putting all your eggs in stocks is not such a smart move.
So if you have a perspective where you believe in both and you're heavier on the trading, how do you feel about long-term investments? As in, why bother? Other than to take out a margin loan.
It's a safety net. Use it as a safety net, because trading is risky. And as you do lower that risk, the more you research, the more you understand what you're doing, and the more you stick to your goals, you do lower that risk, but you do still need a safety net. And also, depending on the amount of money that you have, you may not be able to invest that entire bulk of money in the stock market. Because the stage I'm at now, I cannot trade my entire portfolio in the Jamaica stock market because it's just not that liquid. So long-term investing or value investing, as a lot of people would say, you do your same assessment, you do your same analysis. You know that, all right, in a couple of years, you still have to create a goal for yourself. You look at the financials, you read all the news about the company, you know what they have planned, you know what they have coming in a couple of years, how that company is going to, is that company a market leader? Is that company going to be around 10 years from now? Yeah. And you put your some of your eggs in that basket. And especially if it's a mature company, more than likely it will pay you some income over the time. So you have that safety paying you probably your little 2% dividend. It may accumulate at 20-30% for the end of the year, but I'm not comfortable with seeing 20% growth at the end of the year. That doesn't work for me. So I want 100, 200% at the end of the year. So I have to put in the work that it takes to get there, which is why I have a trading portion for my portfolio. And the bigger the bigger the trading side of my portfolio gets, I'll take out money and put it in the long-term side of it. So they both feed each other.
Okay. Yeah, that's what it sounds like. It everybody working together for the greater good. So, I mean, especially for the Jamaican market, because you don't trade on the US market, do you?
No, not at the moment.
So just the Jamaican market, which
Yeah.
is very impressive. So a lot of persons will say that it involves a lot of speculation. Trading involves a lot of speculation, and it goes against what might be considered, the company valuation. And what are your thoughts on that?
Trading is speculation, but investing involves some sort of speculation as well. Because if you wait until you have all the information, then you and everybody else have all of the information. You're supposed to be making your investments. You do your assessment. You look at the company plans. You say, okay, this is what I expect these plans to do for the earnings of this company, and this is what I speculate to happen. And you make your investment. So by the time the news hits, you realize your analysis was right, and everybody else sees it. When Gleaner drops, say, oh, this company dropped, 100% earnings, 100% increase on their earnings. You didn't know from a long time. So when everybody start buying it, you're now selling it to them.
Okay, you're now selling it to them. Okay, I like that one. Make sure you're selling it to everybody else, because you don't want to. You're not buying when everybody else is buying. You're selling it to those who are ready to buy.
You're selling it when everybody's buying.
Okay, for a profit, of course, because the rule number one, don't lose money. So how has COVID affected your trading? Because I know that you said that you've been in this for 4 years, but you've been trading heavily for just the last few years. So how has COVID really affected it?
COVID boosted my confidence even more than the year before, because COVID hit, the market crashed, the market was down, nobody made any money. Not really. The market wasn't completely down. The market seemed like it was down because the heavy cap stocks, which were most of the financial stocks, the financial sector was hit really hard by COVID. So it seemed like the market was down, but there were still stocks that were doing 300, 200% during that time. So when COVID, at the start of the year, going into COVID, I sold my stocks because I saw the hit coming. I was not willing to take it. I exited 99% of the stocks that I was holding. So I was fully liquid during COVID. And when the market started panicking, people were panic selling, I provided a nice safety net for them to sell to. So you have all your stocks you're trying to get out, cool, I'll buy it from you. And when the market gets over this exaggerated overselling, I'll sell it back to you at higher than you sold it to me. Because
so you saw the hit, you anticipated getting hit. You sold everything when it was before it went down, and you bought it back in the what they call the buyer's market, and then you sold it back when it started to go up.
Yeah, and it wasn't even going straight up, because stocks never move in a linear fashion. Stocks never go straight up, they never go straight down. If you see a stock going up, it's gonna go up like that. And if you buy and sell on those dips and rises, the ceilings and the floors, the amount of gains that you make in that time, it's definitely going to be greater than that same stock would have moved in that time. So during a 1 month period, the stock probably moved 10%, but it didn't go straight up 10%. It was going that way 10%, and you buying each time it goes up, each time it goes down, probably at little 15% intervals. You do that 5 times, you're at 100%. So the stock moves 10% in the month, but you have made 100% from that same stock during that same month. And that is the beauty of trading for me, because you're allowed to beat the market based on how the market moves. Because if you understand that the market is never going to go straight up, you can make money from a stock falling just as much as you can make money from a stock going up.
So so I know the Jamaican market isn't as volatile as the US market. So when you were in and out, you said it earlier that it was very time consuming.
Mm-hmm.
How do you know that it's going to go up and down? How do you know this? You just going to just get in there? Or do you use technical analysis? Like, I guess
Of course I use technical analysis. Of course I do my analysis. I'm not gambling here. It's something that I'm observing. I'm reading the cues. I'm reading the candlesticks. I'm looking at the sentiment in the market at the time, how people are thinking. The psychology is also another big thing in the market. You have to understand why somebody would want to sell it. And when you're selling, you have to understand why somebody would want to buy it. And why does that person think that this is a price that I would want to buy it from them for? You have to think about all of those. So you have to think about the psychology and the sentiment behind everything. And when you get that down, you can predict how people are going to move, especially based on certain events, because the market is very, very predictable around certain events and around certain times in the market.
All right, take me through a day in the life of a trader now. Take me through you wake up at 7:00, you get dressed, you review.
I get dressed, I go work. 9:00, I sign into J Trader. I observe the pre-open, because 9:00 to 9:30, that's the pre-open section of the market, and the orders start coming into the queue. You can see how people might feel about the stock going throughout the day. You can even pick up some opportunities in the pre-open market that can help you to trade throughout the rest of the day. So the market opens at 9:30. If there's an event happening, I make my trades, I put my orders in, I set my goals. Actually, I do my analysis, I make my trades. I'm not going to say I'm a day trader. It's not every day I get up and buy and sell on the same day. It does happen. And if I see the opportunity and I take that calculated risk, then I have day traded before, because I have seen the opportunity to do that, but it's not what I preach on. So yeah, look for the opportunities. On any given day, you can check for at least one stock. There will be at least one stock that is the highest and the lowest traded price for that day is a spread of at least 15%. So if you buy on the low of that day and sell on the high, and you make your 15% in a day, that's not bad. You take that into the next day, you look for it, you do it again. If you understand why it happened the first time, you will understand when it's going to happen again. So it's a lot of experience. It's the time that you have in the market. They always say there's a difference between timing the market and time in the market. The longer you spend in the market is the more clearly these things become to you, and you can spot them a mile away.
So you, as a trader, you go in, you have your little spreadsheet, you have like all the stocks on the spreadsheet, and you say, all right, I'm going to go in at this price.
Mm-hmm.
And you're coming out at X price because that's your spread.
Okay. When it's my 10%, I take it. I'm not going
to. Doesn't it 10%? You take your licks and move on.
take your licks and move on. If it gets to the 10% and you do an analysis and say you think it can actually, there's a reasonable chance after you do your SMART goal, you do your analysis, you look at the event that's happening, you look at the news that's available to you, there's a chance of this going a further 10%, then you adjust your goal. There's nothing wrong with adjusting your goal if it's calculated enough and if you do your proper analysis. But if you just blindly say, I feel like it can go more, no, that's when you're gambling with your money.
Feel like it can go more. You have to do,
you can't feel like it. You have to know, say, there is a reasonable chance based on my assessment and during the time that I was investing for, that I can get a further percentage on this. However, if it gets to your, let's say you wanted 20%, it gets to you 10%, you think you can get another, it gets to you 20%, think you can get another 20%. All right, but remember, you need to be able to know how much you're willing to lose. So if it gets to you 20%, you see it falls 15% from that 20 that you initially had. Get out.
Do you think women are more disciplined than men?
In general?
You're calling it out, Lisa.
It's like the bat signal. It's like the bat signal. He just appears.
He was waiting on that.
I was waiting on it. Awesome.
Hi, Jermaine. Welcome back. Hi, Chike. Welcome.
Hi,
Let me introduce you to Shanice.
Nice to meet you, Chike.
Nice to meet you, Shanice.
Finish that question, Lisa, because I want to hear it. I'm
just curious, just based on her experience, because as a female, I'm sure she gets a lot more women coming to her, asking her questions because they want to know how another woman would do it. Now, from my personal experience, I do think women are very disciplined with money, but they're disciplined and it's mainly because they're not willing to take risk. So what I was going to ask her is, from her experience, does she find women to be more disciplined with getting out without getting, without that need to, I can go some more. You understand? Because I mean, I know male traders and they're just like.
I see what you're saying. Fair question. Go ahead.
Women are more risk averse, or we should be, but you're taking a calculated risk. The more you know about it is the less that risk actually becomes. So the more you do your research, the more you understand what you're doing, the risk becomes less and less. And you know how much you're willing to make, you know how much you're willing to lose, you stick to it. I feel like as women, we can better stick to our decisions as well. So
yeah, fair enough. Yeah.
So yeah.
Sip tea.
Women have the ability to be great traders.
So I've had that situation where, you know, I've made, and Shanice, I have to thank you, because a lot of what you've said so far, I'm like, it sounds like some of the conversations I'd have with my wife, where I'd be like, well, this stock is up X amount, you know, this was my analysis, you know, it sounds good. I'm like, but it's not quite, I think I can make more money. And she's like, what price did you want to sell at? And I said, well, it's there, but there's more to come. She's like, sell.
You see?
I'm like, that's, you're not thinking big. She's like,
no, because we're not thinking big. We're thinking about goals. And if you're
thinking about what we initially wanted and you stick to it. So we're definitely better at sticking to our decisions and sticking to the goals that we created for ourselves initially.
Yeah, that is true. I give it that one.
I will interject and say, Jermaine, you're not thinking greedy. That's what you're doing.
Yeah.
No, because if it is that you want to win big, you have the potential to lose just as big. So why not?
And
It's
most of the
called
time,
risk
most of the
management.
time you find out the potential to lose just the bad way, because when you set your goal and then you don't go after it and get out when you're supposed to go after it and say, I made my target, I've made my goal. Whatever happens afterwards, blessings to the other persons who made that. You end up finding out just how badly you should not have gone against your goal. Market
Yeah.
teaches every day.
Exactly.
Mr. Market comes in there every day and gives you offers and gives you bust. Teaches you every day.
Shanice, I don't think I
Facts.
gave you any details on Chike. Chike is our resident value investor, and
Yes.
he does not. I wouldn't say he doesn't believe in trading, but he's quite skeptical on the idea of trading.
All right.
He's
Okay.
I'm
Why?
I'm not skeptical. The truth about, actually, there are a couple of things I need to clear up first and foremost as I was
Please,
listening to this today.
please.
Firstly, my belief in Pulse, while it still holds, I don't hold my holdings in Pulse anymore like that because I reached my goal. Um, when I joined the team and I was screaming from the rooftops about our investing in Pulse. Pulse it has some financials same way, but it's not just the
Mm-hmm.
financials. It had sound
No.
buying opportunity at that point in time. It was not egregiously overvalued as far as I'm concerned. It was, I bought in at $1.60. Whatever was the first time that they stock split, I bought in at that. And then I kept buying every single time because I tell these guys, I go by the theory of Buffett theory of margin of safety. I've stuck by that for the
Yeah.
most part. So I buy in every single time the stock drops into margin of safety, even if the price is higher and I believe in the company, I'm gonna buy it. I'm gonna continue to buy like that.
Same here.
So every single time I kept buying, it was margin of safety and it made sense. When everybody decided to push the company all the way up to, what did we reach? Six, whatever was the high point they reached. I was like, I'm
$13.
out.
Mm-hmm.
Yeah, whatever that was, I was
That
out.
was pre-split.
Yeah, right. That was pre-split.
Mm-hmm.
I was out. I took my money because
Mm-hmm.
my goal was that, one, I recognize that Pulse, sorry to say whoever's on the call, that might be invested, doesn't pay dividends like that. Their dividends are paltry, so unless you have a very high volume of holdings, you're not getting much.
Mm-hmm.
So I took the price appreciation, and I left a small piece inside there because we know that there's still information on the horizon. They're supposed to still come back for APO. In the event that they
Mm-hmm.
plan to give us a discount, I remember David Rose's statement
Yeah.
that don't sell everything, keep a
Keep
small
at least
piece
one.
just in case. So I kept a little piece, but for the most part, I'm out. And I've moved into the next company that I firmly believe in, and that's growth. The funniest thing about me is that while I don't trade, actually I don't trade that either, but I don't trade companies at all. I don't trade at all. Really and truly. Germany is really trying, by the way, Shanice. He's really trying to get me to see
I,
this.
I've been trying to get
How
him to
long
see
do
the
you usually
benefits
hold
of
for?
trading.
Not, it's not gonna happen. Oh, pardon?
How long do you usually hold for Chike?
Minimum, it has to start. Well, first and foremost, every single company I buy starts with a timeline of 1 year. That's the first thing. And then it
Okay.
extends out from there however long. And I should say it this way because um listening to what you were saying from before, my base principle when I even started investing back in 2015, when I met up with Jeremy and the rest of the group, I told them that I was only preparing for one thing every single time in the market: extreme volatility and the market crashing. That was my premise, to basically be there when it is always bad, because I want I want to be able to first keep my emotions in check, because that's the biggest thing that will go against you, as you rightfully said earlier on. If you can't handle your emotions, don't get into this. Like you as well too. While I don't have a split portfolio of allocation to trading versus investing, I have a 86% allocation to equity. I'm the majority in equity, but I'm split across. There's equity, crypto, mutual funds, unit trust. I am diversified along, well, Germans don't argue concentration now, but I'm in each piece of the units that are there. I'm both in Jamaica and also overseas as well too. So I find I don't even do trading on crypto, to be very honest. I have a particular set of particular flavor of cryptos that I like, cryptocurrencies that I like based on the blockchain that is behind them, and I just kept buying. So yeah, my goals are normally long term, and I guess because I just don't want to have the time as much as I sit in front of a computer every single day. That's what I do, 24/7. The time in the market, I just don't care for it. I really don't. I like to just I tell them I like to set my price points and just walk away, because I do like 4 to 6 hours on one company when I analyze it. I told Simon that one time, because I get deep. I do all of the ratios. For an amateur investor, I get deep. All the ratios, comparisons of industry, etc. Then when I make that decision, I know that whatever's going to happen with the company along the line, I don't care up or down. I don't even deal with quarters. I don't really care about the quarters either. I just look on the company and I go, all right, this was the year. I saw the trend year on year for the last 10 years, 13 years, etc. I make my play, right? As I said to German, I'm getting close to him now in terms of the fact that he gave me the volume perspective, because I didn't really buy that much before, and that's because I was testing my theories all the time, right? As I improve, I
So
put a little.
TK, why don't you test the trading experience?
I doing it. I was thinking about it on crypto. I rather throw it at something that has no intrinsic value whatsoever, when it's pure speculation.
Why would you do that? That doesn't even make sense. There'd be no comparison.
Actually, it is. In my view, it is, because I basically just moved into so.
TK, could it be that you're not emotionally ready to be a trader?
I think that's it.
So the truth is,
I think you're not emotionally ready.
So when I started all of this, just like how you thought, I have an adept knowledge of candlestick charts. I have an adept knowledge of Bollinger Bands. I have an adept knowledge of relative strength index, stochastic RSI.
Is this the long version of yes?
All of them. But
I feel like this is the long version of yes. I can't
me,
emotionally handle it.
It's time. It's just time.
GK, listening to you and listening to how you do your analysis and you deep dive into the companies, doing that can very much allow you to know that at X point, the company is going to produce this sort of results, or this news going to happen with the company. This is happening.
See, Jermaine say that all the time.
That is what I say to you.
Yeah. On this day,
yeah,
the market is going to react in this way, and I can take profits. And the market always reacts, or many times reacts in a very exaggerated way. So when
I feel like Shanice just threw out a challenge. I feel like Shanice just threw out a challenge.
The thing about that, and I'm going to hit this. Hold up, I'm going to hit this up. The thing about that is that, as you rightfully said about the Jamaican market, I hold the same premise, and I don't really like it because of that. To be very honest, it's for the most part, I think it's emotional. It's not speculative. It's just, well, you can tag it as emotional speculative put together. There are only, remind me, Jeremy, and Shanice, how many companies in the Jamaican market?
Maybe 90.
90. Very small pool to be running around in, right? And so forth. I actually always said that, for me personally, and I take the long view of when I look on investing. I'm tagging the economy and all that stuff together with it. For me, Jamaica is a pond, and then I look at the bigger market, the global markets. It's not even just the US market alone. For Jamaica's preparation for me is preparing me for the global market. So Stock 600, Nasdaq, etc. To go into those and to basically take advantage of 6,000, 8,000 companies, where basically I can apply the same principles that I've been using and pick a basket of companies and just sit back and just modify that basket year on year and never have to touch it.
GK, the same principles and example you're talking about applies here, because So the things that Shanice would look at in terms of making her
Same thing as
assessment
we're
and
looking at.
place, it's still based on people. It's people trading in the US, it's people trading in Russia, it's people trading all over the world. So
Again, though, it's time, and I don't like to give up my time like that.
But
let me
you
let
spend hours anyway.
let me share an example that I went through with Chike a few days ago. We won't mention a company here because the company is not important. I said to Chike, a company now is selling for $10. You think that the company has a fair value of 20, right? If that company is at $10, you buy, right? If that same company is now at 30 and you say fair value is 20, why not sell at 30, knowing that at some point there is likely to be a correction? And then now you can, if you sell at 30 and you re-enter around 20 or 21 or 22 thereabout, you can actually buy more units of the same company because you had more cash in your hand selling at 30.
Because the
And
because the
Exactly.
and I showed it to him, and I was
because
like,
while that was true of what you showed, it is also true that nothing is a given. So it doesn't have to go back down immediately
that
like
is
that.
true, but it's not a given that you hold the thing for 20 years and it's valued something when you get to
People,
45.
really? Okay, so let's look at that. Home Depot. You know about the backing behind Home Depot. Okay, so who are the persons that are holding? How wealthy are they today? The persons that did the analysis on Home Depot and are holding
The one company is one
Berkshire
company.
Berkshire Hathaway. The persons who are
Listen,
holding that.
listen. Nobody never come here for listen to the two on the talk.
That's
Nobody
true.
no come here for
Shanice,
listen to the two on the
Shanice.
talk.
Fair enough.
Both of you are value investors. Jermaine is a little bit more, let's jump in and, dance around in the pool.
Sure.
Come to talk to this young lady here. She's the one who wants to hear because she's the one that is doing stuff and rocking this market because she's a female trading. Now, she doesn't day trade, which I'm grateful to hear. Some people are doing it, some people are not. But I have a lot more questions for her, and there are people who are asking questions in
Please.
the chat that I would like to get to.
Indeed, go ahead.
All right, let's go.
Nobody come to hear the two of you talk and argue. So, hi, Shanice. Welcome back. Don't mind the men. They get very excited. They get very excited. So, all right. So we're back on the topic of you and investing. I'm going to start asking you some of the questions that I'm seeing here in the chat. I have one question that is, what is a good time horizon for trading in terms of holding stock? So you had said that you normally go from 1 minute to 3 months, but what do you find is your average time frame?
My average time frame, probably a month to 3 weeks. Average time frame.
Really?
3 weeks to a month, yeah.
So you'll go in, analyze your company, and then decide if you're going to, and then hold for that time frame, and then get out in that time frame whether or not you've made your mark. Because let's say 3 weeks go by and you've not reached 20%. Are you going to keep holding?
If the 3 weeks go by, I don't reach 20%. I do my assessment again. I do the technical analysis. I look at the queue. I look at the supply and demand curve. If I see that I should take my gains at that time, I'll take it at that time.
Okay.
If I see that there's opportunity for it to still go to my 20%, even though my time horizon has passed, I will wait for it to get to the 20%. I'll readjust my goal and wait for it to get there.
Do you spend 6 to 8 hours like Chike on your company analysis?
I probably spend even more than Chike because I'm doing this for several different companies at several different times. So, or at the same time, even. So, I have to do a deep dive on the market as a whole. I can't focus on one company because I'm focusing on this company. Something else is happening over there. Another thing is happening over there. I need to know where all the opportunities are and which of these opportunities is going to give me the greatest return that I'm looking for. So I have to look everywhere, and that takes up the majority of my time. I'm always reading something. I'm always on JSC's page seeing what's dropped. I'm always reading the news articles that come out, everything that John Jackson posts. I have to stay ahead of the market. So I need to know everything that's happening. So it's not even like an 8-hour thing. I couldn't even put a time on it, honestly.
So you spend the whole evening analyzing like companies.
Pretty much.
When you love it, that's what you
And reading
do.
all the information that's out there on companies and seeing how I can profit. Randy have this thing where I'm saying him like to connect the dots of all the info that's out there. Even if it's not even about a specific company, just something that happens in Parliament that can possibly affect a certain sector or possibly affect a certain company within a certain sector, you have to connect all of those dots.
Okay. So we have another question. What are some of the changes you would like to see the JSE make to facilitate trading?
Option short
Circuit
selling.
breaker. The circuit breaker needs to be abolished. We understand that they're trying to save people from losing their money. All right, then have a circuit breaker for when it's falling. But why are we stopping people from making money? Why is there a ceiling for where the stock can go for the day? I don't think that needs to be there. I definitely think the circuit breaker needs to be readjusted.
Okay. Okay, yeah, fair enough.
I definitely say adjustment, and some persons were talking about this on Twitter the other day. Adjustment, I think, is needed based on, I guess, my understanding of how long the existing rule has been in place. Now, we're definitely not going to go into realms that have nothing to do with us, but I mean, since the question was asked, I would say if you're interested in seeing a change for the person who asked the question, I believe there is just a channel that you can go and make that recommendation. I think the Jamaica Stock Exchange meetings that they have is where you can go and raise these concerns. But yeah, I've been hearing a lot of persons say that rule definitely would need to be reviewed. You know, which is best is not for us to decide, but yeah. So
I think it holds back the market. And I heard you mention short selling. So that would be nice for the market to actually like have. They mentioned some time ago that they were going to introduce it when they were switching over to the NASDAQ platform.
Yeah, I heard about that.
But we're still waiting on it. I don't know if it's COVID threw them off schedule, but we're still waiting on it. So we'll see if that can hold the market changes around that, because short selling is a whole other thing.
That it is.
And a whole other aspect of trading.
That's a different monster.
There's no way to introduce short selling without having that rule adjusted. There's no way to have short selling if you can't adjust that. Yeah.
So they need to revisit that rule.
Yeah.
So I have another question for you, coming from the comments. How likely are you to indicate that you have had less than average return, lesser than previous years, if this happens anytime in the future?
I don't think repeat that question for me.
How likely are you to indicate that you have had a less than average return, I guess less than the previous year, if it happens in the future? So I guess would you share that you've done badly this year? You didn't make your
Target.
yeah.
A target.
Or your goal.
I guess I don't have a problem sharing if I don't hit my target. I don't see why I would. If I'm asked, I don't see why I would ask. I would hide anything.
I wonder if that has.
Last year, my portfolio definitely didn't perform the way it did in 29. Did you lose Lisa?
Yeah, she has to go for a sec. She'll be right back.
Yeah, so 2020 COVID year, my portfolio definitely didn't perform the way it did in 2019 when I hit that over 200%, but I also didn't lose.
Yeah. I think that's about just willing to be, somebody who is willing to be wrong. You said it that you're not right all the time. So if it is that, yeah, I mean that's just, yeah. I don't see that being an issue for anyone who is confident in what they're doing and why they're doing it. So yeah, it's to me it's about the long term. So if it is that long term your strategy works for you, it's not to say, well, I did 200 this year and next year it's only 50. It's I think that's that's a non-issue really. All right. Let me see where we left off with the questions. Someone was asking, I think DB was asking, what books do you recommend for learning how to trade? I like how to figure out patterns, etc.
How to trade. I haven't read any trading specific books. As for investing, I like the Benjamin Graham books, security analysis and the intelligent investor. I definitely did enjoy those books, and it taught me a lot about investing and how to value, and even the whole idea around speculating and how speculating can be linked to investing, and how you can marry the two. So I do like those two books. So I tell everybody to read them: Security Analysis and Intelligent Investor.
Okay, cool. All right, Chike, you might have some book recommendations as well. I know you're a heavy reader.
I am pulling back up. I took off one recently that I spoke on. It was. Did I get rid of it? I think there was an actual trading one that I really was intrigued as to what the person was saying. I can't remember it now. Give me some time and I'll find it back.
All right, cool. All right, so we have a lot of questions for you here, Shanice. Next one is, how do you know that a particular company is going to be in the green before it is reported or broadcasted through the news?
There are always signs, even if it's not in the news. You pick up that there's a new product on the market. Who sells this product? You find out who sells the product. It's a listed company, but it's not being as spoken about as yet. But you know that it's going to be adding some value to their bottom line. Get it before everybody else. So by the time everybody else find out, say, there's a new product line being offered by this company, and the profit come in and the profit look nice, you're already in waiting to sell it to everybody who is now excited to buy.
Yeah.
On that note, actually,
you just have to stay ahead. You have to read everything, research everything. News is always out there. Buildings are going up like crazy. Construction is booming. There are construction stocks listed. They are going to be benefiting from the construction, the heavy construction that we've been seeing going on. And we saw that when the construction companies were reporting their numbers. So the people who were buying at the time or close to when those numbers come in were the people that were getting in late, because that sign was already clear from way before to somebody that was just paying attention to what's going on. COVID hit. You know how COVID is going to affect certain company. You know that things flying off the shelves. Everybody go supermarkets. Everybody have to stay home. What we're doing at home, we can't eat out as much anymore, so we have to cook more. We have to buy more perishable items. There are companies that sell these items. So there are companies that are going to be producing great numbers when that time comes for them to report numbers. But you would already know because you're seeing everything that's happening around you. You're already ahead of the market. So it's just picking up on the little things. It's not even necessarily a news article or the financials. It can literally just be simple things that you're seeing. And even the news articles, a lot of them drop and people don't pay attention to it as early as they should. They don't read into it that, okay, X company say them doing this and this and that. Them say exports doing really well for them, exports through the roof. But I'm going to wait until the financials. By the time the financials hit, it's too late.
Yeah.
Many times too late.
I find that there's typically that delay. Yeah, I find that there's that delay. So and there's a way to anticipate. So I mean, you hear that a company is gonna be doing something or rolling out something, and plans are there for 2022, 2023. Like persons don't wait until 2022. Exactly.
And that don't make sense.
Yeah.
Because that's when everybody else is going to be buying. And how stock prices move, supply and demand.
Yeah.
So you need to get there before that heavy demand reaches. Because when that heavy demand reaches, that is going to put pressure on the price. And then that is going to let the price start going up, which is when you should be selling.
Yeah. Pat your goal.
That's your goal.
Yeah. All right, cool. Lisa, ready to drive again?
Me? Always.
Yeah.
Okay, well, for those who have any questions for Shanice, please make sure you put your questions in the comment section. We're going to be wrapping up soon. We only have a few more questions that we're going to be asking Shanice before we thank her so much for her time. Don't forget to like, share, and subscribe. Shanice, before I continue with the questions, you want to throw out your handle and how people can contact you and if they want to do your workshops and so on?
All right, my handle, mostly Twitter, well, pretty much only Twitter. Top Striker Shan, so that's at TOPSTRIKERSHAN. If you want to shoot me an email, you can email me at Shanice, that's SHANICE, at topstrikerja.com.
Okay. And about how much is the workshop?
So I do both private and I have the group session, the big group session workshops. The group session workshops, I'm going to have one. I've been saying very soon, I need to put a date on it, but I'm going to have one next month. That's going to be probably around $10,000 per person for each workshop. If you want to do a private session with me, you can reach out as well. I do offer those for individuals who think they need more of a one-on-one talk or a one-on-one teaching experience. So you can reach out to me for that and we can make arrangement for those.
Okay. All right. Well, let's jump back into the questions. We have a question from Simon, which is, Shanice, do you support your technical analysis with fundamental analysis?
Of course. Technical analysis, for me, I don't think technical analysis can stand without some sort of fundamental aspect behind it. So you do have to completely understand the company that you're trading or that you're investing in, and you have to understand why the company would be moving the way it is on a technical side. So you have to completely understand Randy has this thing where he says, move up. You have to understand how the company make its money, how it's valued, how the market views the company, what's happening in the universe of the company, what plans the company has coming up, and when those plans are going to be happening. So if you know all of those, then you can say, all right, at X time, I'm going to be seeing this event happen or these numbers drop, and how the market reacts when things like that happen is a specific way. So I can now plan my exit around how the market usually behaves when things like that happen. So you do have to completely understand any company that you're going to be short-term trading.
Okay. Well, I guess it's a continuation of the previous question. Do you think the technical analysis has its limitations based on the weak form nature of the Jamaica Stock Exchange markets or inefficiencies? Boy, Simon just throw out the question themselves.
Yeah, I love the question, Simon. And yes, I do believe there are limitations because our market is very small and it's not very liquid. We have a cap of like some trillion now, but you're not gonna see trillions of dollars trading in the market on a daily basis. Probably see a couple million cross, and I say you probably see a billion or two cross. So you're not able to fully follow all the patterns of technical analysis, or the candlestick is not going to always follow this pattern because of how small and inefficient our market is. So if you look at a market like a forex market or a crypto market, which are much larger, you will be able to accurately and more frequently predict how the stock is going to move based on following those patterns. There's a higher percentage of those patterns being followed, but it happens in our market. And I have picked up patterns even from the candlesticks that help me to trade, but it's not 100% reliable because of how small the market is.
Okay. I guess Simon's other question is now explain the premise behind removing the breaker on the up.
Behind, I don't think I
The
understand the
circuit,
question.
circuit. So the
Circuit
circuit breaker,
breaker.
you had it to remove it on the down, but why? Sorry, don't remove it on the down to protect the persons. So, but why remove it on the up?
What are you then protecting people from? If you're stopping it going up, you're really just holding back people from making money. So I don't see how the market is now. It's not even like we have shorting right now, where you might have an argument against it going up too fast. But in a market where we're allowed to trade, and we're supposed to be making money from these trades, why would you only allow it to go 15 or 30% for that day? I just don't see the point in that.
Because if you have somebody short in the market, then they'd be borrowing, which would too much is too much. But if everybody is just making money, then why stop it, right?
We don't have short and we haven't had it for years. So stopping it from going up too fast.
Okay.
I don't agree with it.
So the thing that though that because I was reading the other comments that came from Simon as well, is his premise is that by removing the ability for the price to be discovered, if you only allow it to go up, and you stop it from coming back down, then as it goes higher and it gets overvalued, you price out a lot of people even being able to enter in the future anymore. So pretty much you'd end up with basically a palace, $1,600, and nobody really buys the thing if that be the case. Although they hold that close to chest, but
and the market
might be the wrong example. But
the market always corrects itself.
But it can't correct itself as fast going down as it will do what it will do going up.
I don't necessarily agree with that.
Trying to save people from losing too much money, but I still don't see why they should stop it from going up.
Well, So a trade, I mean, a trade is when two people agree to buy at a certain price and sell at a certain price. I see what Shanice is saying. So, I mean, the same example that you would use, Chike, Palace got to the price it got to within the limitations of the current market. So, I mean, it means that persons were willing to pay that price for the stocks they traded at that price. So, I mean,
The
yeah,
question, the contention I have is timeline. So I'm allowed to go up 50-60% in a day, but I'm not allowed to drop 50-60% in the same day on the reciprocal. I don't think that is fair. I agree. If you're gonna remove the circuit breaker, remove it both ways. You have to have, just like we're having the dollar free flow right about now, up and down. You have to do it the same way. It's just balance. You can't have it only one way.
Well, I would just say, I mean, it's I'll leave it alone. If we're maybe so Simon is actually recommended that we maybe have a spaces discussion after this. So maybe I'll share my thoughts fully on that medium. I don't think a video that can be seen, all across the world, maybe taken, if somebody takes a clip out of context.
Yes.
I don't want that to be the case. So but yeah, so I see where Shanice is going. I know where the question is coming from. It's something that we've been discussing for years. I mean, locally, a lot of people want to see some improvements there. It's not our call. Let's move on, please. Another topic, yeah.
Okay. Well, for anybody who wants to get in contact with Shanice, she, I guess, will post on Twitter, follow her on Twitter, and she'll post on Twitter when she'll be having her next workshop, because she did mention that she has not set a date. So we have a few people asking in the comments, Shanice, when is your next workshop? So set a date and let everybody know.
Yeah, I've been bombarding my DMs asking me about it. I'm sorry. I'm not gonna let you
for
guys
those
know
who want, for those who want one-on-one, feel free. Her email and her handle are both in the comments as well. It was absolutely lovely. We have one more question, but just so before I ask this question, I'm going to change the question just a little bit, because this person is asking about FESCO, and do you think buying this stock would be a wise long-term investment? No, Shanice is not an advisor.
Neither are we.
I am not a licensed financial advisor.
These are these two.
Wait, you should buy FESCO or not. I do not give advice. I do not want to go to jail. I don't know. You read the prospectus. Read the prospectus thoroughly. FESCO is that prospectus is actually a really nice one to read, and it's very. I think it's very simple to read.
There are lots of videos that we've done on. Sorry, go ahead, Shanice.
No, I was gonna say read it through and talk to your licensed financial advisor about it. They can tell you whether or not it should be long term or short term.
Yeah, and I was gonna say we have done videos to review prospectus, so we teach you how to do it. There are sessions that Shanice will have coming up to show you how to do things like that, but yeah, not we can't comment on that one, unfortunately. Exactly, CM, not advice. Yes, exactly.
So he says he doesn't want advice. He was just wanting her personal opinion if she was going to go into it. So that's a very dangerous line to walk on, because then somebody else might hear it and say, but Shanice said.
Shanice said you can short term. No.
Exactly.
I have one question if I'll be allowed.
Go ahead, Chike. What's your question?
So my question is, all right, so we've only got 90 companies here. How do you feel you'll fare? Actually, I should ask it this way. Are you looking to step up to the C, which is the global market of itself? And how do you feel about that in terms of if you were thinking about it? What would be your prospects on faring
global
in that?
market? When you say global market, we
instead
talking
of
about
just
Forex?
GS, yeah, everywhere else. So like, so
GSE?
not just the GSC anymore. You're doing the Nasdaq, you're doing the
Yeah.
Stock 600, etc. Because they're all companies and they're all trading. I mean, at the end of the day, they're all using the same
Facts.
either technical or fundamental financial fundamentals or technicals. The jurisdictions, of course, are
Mm-hmm.
different based on the country that is inside that they're in, Japan versus Europe, etc. But at the same time, companies are companies. So, and we're doing the work, we're doing the analysis. How you think, have you given it thought to going up to a larger amount of companies where actually the gain is now possibly astronomical at that point as well too.
Yeah. And I have thought about it, and it is something that I do plan to venture into. I do, however, think, as small as it is, Jamaica has one of the best stock markets in the world. There are a couple of years, well, that we were #1 in the world.
True.
And that's not just a statement. Like, if you're in the market, 2019, I did 276%. I think we have one of the best stock markets, and I'm at a point where I can find value at all sides in the market. But
Yeah.
as your wealth grows, and it can actually grow out of the Jamaica stock market, you have to find other things to do with your money. I would love to attack the global market. Forex, not 100% sure I would go into it as yet. I would definitely need to do a lot of research, because the way how I hear people talk about Forex
Yeah.
sounds, yeah, it's not everybody that speak about it the right way. So I'm pretty sure there is a good way, or is a smart way to do those type of large scale trading. And I have plans to venture into them. Yes, I guess that's a short answer. Yes. But I do prefer the Jamaica stock market.
Agreed. Emerging markets is where it's at. So, and definitely this one is on the up and up. There's no question about it. So for sure,
And we have room to grow.
a lot, actually,
I think it's going to
a
be a
whole
great
lot.
year. I think it's going to be a great year for our stock markets. It already has proven to be.
Yep.
Because I looked at my portfolio and where it was in January compared to where it is now.
I agree with that.
Great.
Same here. Same here. Same here. That is absolutely.
Yeah,
It's been a
I
great
can't
first
complain
quarter
either.
in our
I can't
markets.
complain either. Yeah.
Wonderful first quarter, and that's just the start. That's just the tip of the iceberg.
Neville's comment.
Yeah.
What did Neville say?
Never say that is dancing with sharks in the international market. So careful. Learn to dance a yard before you go abroad. Agreed, Neville. Absolutely agreed.
Neville is our local what do you call it? Inspirationalist.
Yeah, so
Great.
Neville has his nuggets of wisdom that he'll
Yeah,
just,
a lot of wisdom comes from Neville. But Shanice, any last thoughts before we wrap up?
Okay, cool. The last thoughts, get rid of all the misconceptions that you have around generally investing or even trading. You don't need a finance background. I don't have one. You don't need
Neither do I.
hundreds of thousands of dollars or millions of dollars to start. That's not where I started. Trading is not completely just gambling. You're taking a calculated risk. There's a risk associated to all the assets, and you're taking a calculated risk going into this, doing your assessment and sticking to your goal, sticking to your decisions, not getting greedy, creating a safety net for yourself. You do all of that. You do that with your research, your analysis, read everything, live on JC's news page, and you'll be able to be successful in this. I think any Any average person can do it. If I can do it, trust me, anybody else out there can do this. In a couple of years, you'll thank yourself.
Thank you very, very much for that. So again, for anybody who is watching, if you haven't already done it, please like, share, subscribe. Shanice can be found on Twitter at Top Striker Shan, or you can get her email, which I think Jermaine will put down here, over here. Thank you so much, Shanice, for taking time out, reaching out to us.
Thank you for having me, guys.
And being able to share so much information. We may have to go back over this video just to kind of get everything.
Many times.
I personally am throwing out a challenge to Chike to try trading. Try Shanice's recommendation with all your knowledge, and let's see how it works. Let's do a comparison, Chike.
Shanice echoes the same thing that Jeremy says. Maybe.
you know, Shanice, I must tell you, when we had a conversation last year, so many of you guys didn't know this. I reached out to Shanice last year and we were talking, and I was very inspired by our conversation. And I was saying to her, Shanice, this is how I look at the market. This is how I think. And Shanice was like, it sounds like you pretty much know what you're doing. And that made a whole heap of difference for me. And so I've been just kind of doing the things that, and it's been good. It's been really good. I've seen, I believe there needs to be a balance, right? So as anybody with goals, you have short-term goals, you have long-term goals. So I trade for my short-term goals. And I think that is completely fine. At the end of the day, it's how much money you make, not the percentage return. So, 10%, 30%, that to me, the percentages don't matter to me as much as how much I've made, because the goals that I have that are financial based is based on an amount. So if I can trade to get to the goal in 3 months versus waiting and holding for 2 years, I'm gonna take 3 months. It's a shorter turnaround for the same goal. Yeah,
and
so
there's a high chance that you take you take your gains in 3 months and the stock falls back to a price that you can buy back and make another 30%.
Exactly.
The stocks never move in a linear fashion.
Yeah.
So in the 3 years, it probably move 100%. But you buying and selling over those 3 years, you make 3,000%. Were you wrong for buying and selling? No, you weren't.
Yeah, agreed. All right. So Lisa, Chike, I think everyone can say that this was an excellent discussion, Shanice. I think it's very definitely. So thank you so much, Ryan. Exactly. So thank you so much, Shanice. Guys, we do have a meeting coming up next week. If you're catching this on the replay, leave your questions for Shanice in the comments below. As she said, feel free to reach out to her. For us here, we do have a meeting next week. So stay tuned.
Anything.
Yeah. And that's it. Thank you guys so much for being here. Thanks for everyone.
Thank you so much. Learned a lot from you. Very inspiring for a woman, a young woman doing something so great in an emerging market. Thank you. Keep up doing what you're doing. Don't let these loudmouths intimidate you. Thank you so much.
I actually rate everything that she's doing, to be very honest. There's no question about it. Believe me, it's work. And once you put in the work, the success comes. So I can't knock it. It's all about what you want to do. So I have absolute ratings for what you do.
Thanks.
All right, guys. Thank you so much.
Bye.
Thanks.
Bye, guys.
Yeah. Bye, guys.
Bye, everybody.